with GameStop right now. There's no doubt if you watch the news or turn on your TV or open your social media app, you have seen a lot of people talking about GameStop. People talking about hedge funds and short selling and what this all means. And what I wanted to do is pause for a second and just respond. I've been getting a lot of questions, and people want to know what's actually going on. I hear all these terms, but not all of it's making sense. And what does it mean for me? More importantly, everything that's going on, how does that translate into how I'm going to be impacted by everything? So let's start with a quick summary. What happened is you have a hedge fund, and the hedge fund is called Melvin Capital. And Melvin Capital shorted GameStop stock. So when you short a stock, what you're doing is you are essentially selling stock that you don't own. So you're essentially borrowing it from a brokerage firm, you're selling shares that you don't own in the intention that you're going to buy them at a later date to pay the brokerage back. So ideally, if you're going to short a stock, and if you want to make money doing that, you're going to sell a stock at one price, hoping the value of that stock drops so you can repurchase it at a lower price, and then pay back the person that you borrowed it from, but with more funds than you paid it back for, because you sold it for a higher price than you ultimately bought it. Kind of the reverse of how it usually happens. Well, what happened is Melvin Capital, they took a short position in GameStop. They said this is a failing business. We think that it's going to go under. And so they borrowed funds. They sold those funds they didn't actually own. And now they have what's called an open short position. Well, what then happened is GameStop stock began to rally. And it rallied in a big, big way. People from Reddit, other hedge funds, other investors began to really drive up the price of GameStop. And just for some perspective, a year ago, GameStop was selling or was trading for under $4 per share. As of today, and I don't even know what it's done in the last few minutes, it's changing so quickly, but it's trading for somewhere in the range of $300 to $400 per share, and it is swinging wildly. Well, when you're a hedge fund, if you're shorting a stock, or if you're anyone and you're shorting a stock, if the price goes down, it helps you. But if the price is going up, that's a problem. Because what's happening is you sold these shares, but you have to now repurchase them to pay back the brokerage. Well, as these shares are climbing and climbing and climbing, and not just climbing by 10% or 20% or even 100%, but by thousands and tens of thousands of percent, it is magnifying the losses that that hedge fund is realizing. So Melvin Capital ended up losing $5 billion on this trade. Now, that's part of the story. The other part of the story is then brokerages started stepping in. Robinhood, other brokers started limiting people's ability to buy those stocks or to buy and sell those stocks. Why that mattered is as people kept buying, the price kept going up. And when these brokerages limited people's ability to buy, it paused the price or the stock would drop in many cases. So it allowed some of these hedge funds to exit without the risk of those shares continuing to rise and further increasing their losses. So that created its own separate issue of that's not right. This is Wall Street versus the common man of how could the brokerages be allowed to do that? And there's a lot of truth to that. What happened, it's not fully clear why this happened, but it's wrong. And a lot of things happened that exposed some of the vulnerabilities or just really some of the flaws with our financial system. And so there's going to be some interesting repercussions there. But what I want to get to is what does this mean for you as an investor? What most people think, okay, how does this impact me? I know that it'll impact the financial system or different things like that, but how will it impact me? Well, if you were buying GameStop, if you were participating in all that, it's going to impact you in a big, big way. Whether for better or worse, you might make a ton or lose a ton of money. It's no different than gambling if you are purchasing GameStop stock. Now, I've had other people say, is this going to crash the market? What does this mean for my investments that are more well-diversified? Probably not a thing. When we're looking at GameStop, a year ago, the company was worth about $1 billion total, the entire company. Now, compared to that to some big blue chip companies that are worth several $100 billion or even $1 trillion, GameStop is a tiny little blip in the grand scheme of how things work. So if you're an investor and you're owning many different companies and you're well diversified and you're owning a whole bunch of different stocks and bonds and other types of investments, well, this won't impact you. It's a fascinating case study into some of the flaws of our financial system and some things that really need to change, but it won't impact you personally. If you are invested in GameStop, then it absolutely will impact you. The restrictions and the price fluctuations, that will definitely impact you, for better or for worse. But if you're more well diversified, this isn't going to be a market changing event. This isn't going to drive the top of the value of the stock market because GameStop is a tiny, tiny little portion of that. So as we're looking at this, follow it. Keep track of what's going on, but don't let this distract you from doing what actually matters, of saving, of investing, of spreading your money out. Don't let these hangups that people are looking at and talking about, it's Wall Street versus the common man, it's all this stuff. There's truth to that. but that shouldn't be what helps drive you to your future financial success. Focus on what you can control, focus on being well diversified, and little things like this, while exciting and fascinating to watch, won't actually derail any of your future financial plans.